Folks, welcome to Best Stock Charts, the follow-up. This is Bob Desmond. It is December the 6th. We're going to review the charts that I went over as watch stocks last weekend, and we'll see how good those calls were. I have a lot of symbols to go over, and so you don't go crazy trying to find one specific symbol that you're looking for. Just look down in the description area below, and you'll see all of the symbols listed in sequence. So what I want to do tonight is I want to take a couple of moments and go over a technical indicator that I like to call a breakout point failure, or others like to call it a bull trap. And what that is when a stock breaks out, and in this case here, we'll start off with LYVE. The stock breaks out as LYVE did on November the 24th. It validated the breakout point on the 27th, moved higher, and it rolled over again. It couldn't hold this breakout. So you need to expect that in all probability, a name like this is going to move down, retest the prior support level just below, and there's a very good chance that it breaks that support level. Now, you tend to see breakout point failures near the end of a bull run. It doesn't mean that we're going into a bear market. It just means that in all probability we're setting up for a correction in the first half of 2018. And you're seeing these breakout point failures or bear traps all over the place lately. So what does it imply when you get a breakout point failure? What it implies is that it's great that you had the breakout. However, there simply isn't enough buying interest to keep the rally going. And far too many people are looking to book profits rather than become heavily invested. Now, you need to also keep in mind why LYVE rallied. It rallied because of earnings. It was a sell the news event. So you just need to be on guard. And you may be saying, Bob, how the heck do you predict that a stock is going to do this? The market sent you a signal. Actually, it sent you a couple of signals here. While we broke out and had a nice move higher, on the 29th, when we attempted to make a new high, we did intraday, but we failed. We flashed a bearish key reversal and completely retraced the prior day's move. That is a sign of distribution. How do I know it's distribution? Look no further than volume. Volume matters. So this to me was a sell signal. Get out. And had you watched the chart, you would have avoided this bloodshed. How else did we know that in all probability this breakout was not going to be successful? Take a look at your RSI. Lower highs and now lower lows. So what do I think is going to be the outcome for LYVE? I think that we're probably going to rally, attempt to recapture this prior support level. It may even do so, but I think it's going to fail. And I think we're going to come back down, retest the support level, and quite possibly break it. Now, on a weekly chart, the week isn't over, a couple of days left to go. We broke out last week, but failed and reversed. We have a lower high in RSI. Stokes are rolling over. I would avoid these shares. Nectar. We traded this one not once, but twice. We booked profits back here, and then we began to build a larger position on this last move higher, and yesterday we booked profits on that trade when it hit our price target. And today you saw some additional weakness. I wish we could say we got out at the bottom. We didn't, but that's okay. We had a profitable trade twice. Now, why did I want to get out? It's because our price target was hit, and the rationale, the logic that I used to get involved with the trade was no longer valid. I was trading in this extreme overbought trade because it was simply unsustainable. You had RSI that was well above 90. It was not going to remain there. You had on a monthly chart a stock which had hit resistance. That's when we opened up our first trade, when it hit that resistance level. And it was trading above its third standard deviation Bollinger Band in red. It's unsustainable. So nice profits. Congratulations to members who joined in. XLV. We were looking for a continuation breakout this week on XLV. We got that breakout, but now we're retracing back down. I think we're going to go lower here, but I think it's a good thing. I think we're going to come back down, retest this prior resistance level. It should now act as support. If it fails and breaks back down below 80, well, then you want nothing to do with it. But if it retests, bounces around on light volume, well then you have a candidate for a long trade. I don't like the lower highs on Stoch RSI. The indicators look weak, but that doesn't mean there's still not opportunity here. Remember, this is a weekly chart. It is Wednesday, 2 more trading days left to go. A lot can happen. So we'll keep an open mind. Daily chart, we close down the day below the 50-day moving average. Volume is high. Still not time to buy, folks. EWC, no breakout. So this remains a watch. And if it closes down below this lower band of support, we take it off our watch list. We only want stocks that are either A, extreme overbought, B, extreme oversold, C, setting up for continuation breakout, D, setting up for a continuation breakdown. That's it. Right now we have no interest in EWC. If you believe in your heart of hearts that EWC is going to move higher from here, we are trading at the lower band of support. You could scratch the itch. Buy a few shares. By no stretch of the imagination, do you want to go buying all the shares that you want to buy? Then, if you're right, reward yourself by buying more on a breakout above this upper band of resistance. So what you're doing is you're opening a position at a support level, and you're building on your position because you were accurate in your forecast, and now it's making higher highs. That's how you trade stocks. TD Ameritrade. Here's what I said about TD Ameritrade over the weekend on Best Stock Charts. Give a listen. TD Ameritrade, of which I use, one of my brokers. Weekly chart. We broke out on a weekly basis. RSI rising. Stokes are rising. Volume, again, institutional demand. Very critical. So the chart is looking really good on a weekly basis. Now, would I go buying on Monday morning? No, not yet. We need to wait for the proper setup. That's when you use your daily and intraday charts. Members, will talk more about TD Ameritrade. Now, why did I say that about TD Ameritrade after I was so bullish about it on a weekly basis? It's because on a daily chart, which is what you're looking at right now, you could see that on Monday, they ripped it higher. They gapped it higher. Had you chased it, you would have been stuck holding the bag on Monday, and we would have pulled all the way back, filling this gap. Now, it's becoming interesting to me. So members, we'll talk more about TD Ameritrade and see whether or not we'll be trading it soon. We'll come up with a strategy. Facebook. I was relatively bearish on it last week, and rightly so. We pulled back considerably. However, that's all changed now. I am now turning a bit bullish. Will I go buying it tomorrow? No. I want to make sure that we close above the support level on Friday afternoon. Or will it give back all the gains that it's seen from the lows of the week? So Facebook is looking interesting as a potential long. Think about it. Just a few days ago, I was saying it's a possible short. Now it's a possible long. It just goes to show you I have no emotional involvement in the company. I just care about how the money is flowing. Is it flowing into the stock or is it floating out? Are you going to make money on the stock? And which direction will you make that money? That's all that matters. So Facebook, potential long. If we give up the gains of the week and close down below this lower band of support, it then becomes a short. Halcon Resources, retesting a breakout point. This is a weekly chart. We broke out last week. We're retesting. We were trading below it. This is one that we're very interested in, but not right now. I want to see how it's going to close out the week. I still like the resource plays, so there's a very good chance we'll be long of Halcon sometime this week or next. Google. All right, so this is what I had to say about Google over the weekend. Guaranteed. Google, similar to Facebook, but worse. The fact that we had a bearish reversal week, not good. If we get a continuation breakdown next week, we'll be looking to short Google vis-a-vis put options. Probably a bear put spread. In essence, what that does, it hedges your risk if you're buying put options, and it helps finance the cost of that option. It brings down the basis cost. It reduces your upside potential, but you're hedged. It's a good thing. So more to come on Google, but we're looking to short Google. Note the lower highs in RSI. We've talked about this over and over again. RSI is not just a validator of a breakout. It also is very useful for showing divergences, bearish divergences, bullish divergences. In this case here, a bearish divergence vis-a-vis a lower high. And now a double top. Stokes are rolling over. Google's not looking good. Okay, so that was from last weekend. And how is the week treated us? Let's go to a daily chart. We'll come back to the weekly chart. This is a daily chart now. You can see it's been a pretty bad week. We did bounce back somewhat, but what I'm looking at here is a stock that has had a dead cat bounce. What does that mean? Well, it sold off into its third standard deviation Bollinger Band, bounced and managed to close above support. Now, one of the YouTube viewers, Nicholas, left a comment saying that he expected that it would fill the gap, and he was accurate. I didn't argue with it. I thought he was accurate, that it would fill the gap, opened up right here. Now, the problem is that we need to retest this support level, and I think we're going to do that either late this week, early next. And what does that mean? It means that we need to validate that this is really going to act to support the $1,002 level so that you have confident traders moving into it. Right now, they're waiting for that retest. Traders are OCD, professional traders, obsessive compulsive disorder. I have it. They need to see a retest of prior support, and that's a good behavior. So what I'm seeing on this chart here is a rally back, great stuff. However, 2 consecutive days of topping action, and we topped out right at resistance. So while the weekly chart looks good, it's only Wednesday, 2 trading days left to go. This chart can change by Friday afternoon. So for the better, for the worse. So I wouldn't go adding or opening a position here until we got a retest. And definitely we want to make sure that we close above where we are right now. Above, this is a weekly chart, above this lower band of support. If we do not, if we close below it, look out below. How did I know that Google was in trouble? I spoke about 2 observations. Let's update the weekly chart. Get our crayon out. I spoke about RSI, and I spoke about last week's price action here. This was a bearish key reversal. We broke out of this wedge formation. We failed to hold a brand new high, all-time high, and sellers moved in. And those sellers were institutional. How do we know? Volume, well above average. Okay, LABU, I spoke about this one over the weekend, and I like the fact that we had recaptured last week prior support. And you would have expected that it would have held. It did not. It broke right. Actually, we made a new weekly high, but it rolled right over again and couldn't hold last week's support level. This is what I teach members. Don't go chasing stocks at the open. Think about it. Let's go to the daily chart. Think about it. You watched my video over the weekend. You did your research. You were all excited about LABU recapturing a support level, looking good with a bullish key reversal on a weekly basis. That's great stuff. But what I told members over the weekend is that you do not buy LABU until we close above this upper band of resistance on a daily basis. Close above is the operative phrase there. I don't care what it's doing at 10 a.m., 11 a.m., 12 a.m. I'm not a day trader. I want to see what it's doing a few minutes before the close of trade. Does it look probable that it will close above this upper band of support? What are you going to do? Sit in front of your computer all day and wait for that to happen? You don't need to. And you could see that if you chase the shares on Monday, you would have bought up here, and look what happened. All because you didn't have a set of rules to play by, and that's what I teach members. Folks, if you're not currently a member, please, my gold and silver levels are closed. I can't put in any new members. We are booked solid. Silver membership is open. And if you're a silver member, you're the first to get notified of when a silver or gold spot opens up. If you're watching this on YouTube, please subscribe to my channel. Leave a comment below. I will get back to you. If you're watching this on Facebook, Stock Twits or Twitter, please follow me there and join our Facebook discussion group. And you can click the link below and you'll get redirected to our Facebook discussion group. Everybody have a great night, and I'll talk to you soon.